Okay. First question from Peter. Do you currently have a max AUM limit before you are copy blocked again? The max AUM limit now has been lifted to what I think off the top of my head from memory was 150 million. So I'm pretty far away from that. I'm not concerned about hitting it at the moment. So yeah, if you are having FOMO and worried about adding funds, it's not really anything that you need to worry about too much. Of course, if you are thinking about adding funds, I would love that. But yeah, take your time, decide what's right for you, how much you want to add or remove, etc. Also, I think that eToro will probably steadily raise that upper cap over time as they continue building out their infrastructure to handle higher volumes and working with bigger partners. They work quite closely with BlackRock now. So yeah, I think the kind of complexity and I guess scale of eToro's operation is constantly improving. So over time, that shouldn't really be something that really you have to worry about, hopefully. With the rate cuts, do you expect a positive rally in small caps and crypto into the end of the year? That's a good question. I think with crypto, it's a bit more reliant on people's savings rather than interest rates. Obviously, as interest rates come down, it makes investing into stocks and cryptos and things like that more attractive to people. But I don't think we're going to see for crypto that really translate too much yet. I think that will be a bit more of a kind of time delayed effect. For stocks, I definitely think that we can see more money coming into markets soon. There are certain sectors that have really been beaten down. The small caps that you mentioned, for example, have been very much beaten down, and I could see some people wanting to increase their exposure to those a bit more. So yeah, I could see those doing well over the next 12 months or so. Whether or not they're necessarily going to outperform the mega caps and the kind of the big growth trends of AI and, well, in my opinion, electrification, I'm not sure. So I think if it's something that you're considering investing in or getting exposure to, I think you still have to have some caution around small caps, and that's something that I definitely plan on maintaining. Small caps have bitten me pretty badly in the past with the likes of Corsair, for example, which I see someone's asked a question about that. That I'll be answering soon. Lovesac, another company that I really like, but they've just been impacted because of the fact that they're a small cap, even though their balance sheet and everything has been fine. Yeah, I think you still have to exercise some caution around small caps because it is still fundamentally a more risky business to invest in, and they are generally more volatile. But hopefully, the interest rate cuts give them a bit more of a fighting chance of survival, and we start seeing some growth there again. Are we supposed to be seeing your screen? Yeah. Anybody here bullish on Enphase? Yeah, Enphase is an interesting one. I think we're moving into this kind of new paradigm somewhat in terms of renewables in the solar energy sector, in terms of where the investment is going and where the money is. This is really interesting, actually, kind of topic. Maybe I'll write about this soon. But I think what we're seeing from the growth in AI, especially, is that we're seeing all of these large companies going out and buying nuclear power stations and things like that because they're trying to get more capacity and more renewable energy that they can use to power their operations. What's happening is that those assets are very quickly running out in terms of the supply. The availability of them to be acquired by those companies is diminishing. So the likes of Microsoft and Amazon, Apple are investing much more heavily in new projects, and those are going to be much larger kind of industrial commercial size operations in terms of solar farms rather than where we have been investing more traditionally in solar, which is in rooftop solar and residential solar. So while residential solar and rooftop solar should do well with interest rate cuts, and we will see companies like Enphase and SolarEdge come back a bit, and perhaps some of the other companies in terms of the installation side of things as well. Like Sunrun obviously has been in a lot of trouble. Um, Maxion Solar and SunPower have both been in trouble. Um, we've seen quite a few panel providers on their own struggling, but companies like First Solar, for example, that do much more kind of large scale projects have done much better, have fed much better, and certainly the Chinese companies in the solar space as well have done much better. Really, it's about scale at the moment, I think, and that's the area that we will see recover first in terms of solar. So I still hold some Enphase because I think first of all that they're taking market share away from SolarEdge at the moment. And second of all, I do think we will start to see a recovery in terms of the residential solar market. So that's something that I'm still holding a reasonably sized position in, to try and keep exposure to that theme. But yeah, thanks for the question. It's a good question. Um, uh, uh, yeah, we should have been seeing the presentation. How to get the attention of Jay? Yeah, I think next time I need to pay a bit more attention at least at the start of the presentation to the chat. Sorry about that again. I remember a few years back you talked about Corsair. Do you have any thoughts on the poor performance since? Do you still like it? Um, yeah, it's an interesting one. I think Corsair. I think really the problem is they suffered a lot from the kind of going back out trend after COVID. So they saw a nice boom during COVID of activity and more people getting into gaming and streaming and content creation and things, which they have a lot of exposure to. But then when that kind of dried up a bit, that hurt them. And really, since then, they've just kind of been treading water somewhat. And I think that's probably reflected somewhat in the share price. I'd have to go and check it to be completely sure. But the yeah, I think that's really the thing that's held them back the most in terms of management and how the company's been operating in terms of their balance sheet and things. I think they're still in a good position. They're still quite healthy. Um, I think they've historically had a really good track record in terms of acquisitions as well, and trying to expand their product range, and the suite of products that they offer. They've moved much more into kind of production products that are used more for kind of general content creation, beyond just gaming, with the Elgato line of products as well. Uh, in terms of as an investment, I think it's still a risky one because with interest rates where they are, and I think also the growth of that market doesn't look as strong. It's a decent sized market and it is growing and the amount spent in that market is growing. But the actual size of it in terms of the number of people actively looking for products and the kind of, I guess, the lifespan of the products and how often they're renewed and things are kind of working against them a little bit. So it's a difficult one. I don't think it's necessarily a fantastic investment at the moment, which is why I cut it from my portfolio. I still like their products. I still like the management. I still like the direction that they're moving in. I just think there are probably more compelling investments that can be made instead of that at the moment. Uh, I look lovely this entire time. Good to know. Right on time for a recap. um, okay. You mentioned you want to move away from chips. What is your time horizon on that? Also, how long do you think the supply glut for chips will last? How does it play out? There's a few things to consider here, really. I mean, part of what I think is going to make sure that I still keep at least a reasonable level of exposure to it is what's going on in the semiconductor industry geopolitically. The tensions in Taiwan, that is always going to mean that I maintain some level of exposure because of the fact that companies that I'm exposed to, yes, some of them obviously are reliant on TSMC or have facilities in Taiwan, but some of them have started to expand out into other geographies. And all of the companies that I invest in are not based directly in Taiwan. So the likes of Samsung, for example, could be useful in terms of an angle for that as well. And certainly would if a situation did arise with Taiwan, that would obviously impact the supply and demand for semiconductors. There's also what I mentioned earlier in terms of the EV situation and what's going on there. The difference in terms of sales for EVs is, especially in the US market, really dried up a bit over the past year or so. I expect that trend will start to turn around soon. As EVs continue to kind of, the industry has become more and more competitive, and we're starting to see more and more good products that compete with Tesla come onto the market, and also expansion into different segments and categories of cars where traditionally it was just if you want an SUV, then there's plenty of choice. If you want something that's not an SUV, then your only choice is, something a bit more like a Model S or Model 3. So as we're seeing these new products hit the market, I think we'll start to see more people transitioning into electric cars again, and that will kind of help semiconductor demand a little bit from some of those companies. Obviously, demand for AI and data center stuff remains very strong, but we're seeing weakness in laptops and PCs and a lot of things like that. I think the other thing is that as AI continues to develop and mature, and we start seeing more products and services coming out that really utilize AI in ways that are meaningfully useful to people, both uh, in terms of a business and kind of commercial use case, and also in terms of an end user use case, then we could start seeing demand for semiconductors rise even more as well. So that's something that I've still got in the back of my mind. It's also part of the reason that I'm a bit more bullish on companies like ARM holdings, because obviously they do a lot in data centers, but they're also quite dominant in terms of the kind of edge devices and things. And I think that's where maybe some of the growth will be. And again, that also ties in with Samsung as well. So it's not so much necessarily that I'm going to turn very bearish on the semiconductor industry, but I do think that there's going to be a bit of a transition in terms of where the money is made. Nvidia obviously will remain strong, but I think companies like Intel certainly are in some bother at the moment, and I think even AMD are starting to feel a bit more of a squeeze, which is again part of why I reduced exposure there. Okay. Hopefully that answered your question. Okay. And time horizon, yeah, I would say over the next 12 months, a kind of gradual moving down of exposure. So where my exposure at the moment is probably somewhere around 16% or so, I would expect that to maybe halve over that time frame. Next question. You have a small position in Google that you haven't touched since October 2023. What's the plan for that position? How do you view the company? Yeah, my stance on Google has changed a few times actually. I did have slightly more exposure, but then it really felt to me like they were botching their AI efforts, and that they were very much kind of panicking last to arrive at the party, and patching over some cracks and pretending like they had a good product. And largely, I think that was true. They've matured a bit in that front now. The other thing that concerned me a lot with Google is YouTube, actually. Ownership of that kind of user-generated content platform in an era of AI-generated video content, to me was concerning in terms of making sure that their algorithm is still able to serve up good content to people, and that the platform doesn't start facing heavier costs from potentially viewer botted content and a large glut of content that was ultimately not valuable and wasn't really being consumed by very many people. I talked about this quite a lot at the Popular Investor Summit with Mariano Pardo and a couple of other people, and that has kind of changed my view back a bit and into thinking that maybe it's not too bad in terms of the costs associated with those kind of, I guess, threats to the YouTube platform aren't really that high, so it shouldn't eat into profitability too much. And then the opportunities around potentially creating features on YouTube to help people make AI dubbed content or subtitled content, for example, is actually quite compelling and strong. Um, so yeah, it's honestly it's a position that I'm very much on the fence with. I see some positives, I see some negatives. Ultimately, when I compare any of those mega caps with Microsoft, I just see Microsoft as by far the strongest in terms of their positioning, which is why that's the biggest position in my portfolio. But I think I'm probably going to maintain some exposure, if nothing else than other than as a bit of a hedge and helping me stay a bit more in line with the Mag 7 to a very small extent at least. What's your perception of the performance of the market for this next quarter? Yeah, I think actually there's a chance that we could go into the holidays quite strong, to be honest. I know it's been a tough year on people's kind of savings, and maybe that will play out a bit in some of the retail sectors, and luxury goods we've seen have been having a bit of a tough time. But I think interest rates coming down should kind of build back a bit more confidence in consumers to go out and spend again. Um, I think yeah, I think it's looking like it should be an okay quarter. Again, like I reiterate what I said earlier, right, which is that the sectors I'm most bullish on really are the kind of spending from large companies rather than like consumer spending. So in solar, I expect to see more of a kind of recovery in the orders that are coming in for solar from large companies building massive solar farms and big infrastructure projects rather than individual households. I expect that we will see more money moving into the electrical industry precisely for the same reason. It's all coming from data center owners and national governments wanting to improve their infrastructure and things like that. So really, I think that's where for me the money is. It's looking at where the spending is going to be coming from, and I don't think it's coming from the consumer yet. I think it's coming more so from large enterprises. So that's where I'm trying to keep my portfolio focused. Again, another reason that I'm more bullish on Microsoft generally than some of the other big names in that space. I know everyone's got their kind of uh, their online solutions for like cloud computing and things, but Microsoft generally has much more exposure to kind of large enterprise clients. Um, Were tax wrapper accounts, ISAs, etc., mentioned during the recent PI summit? eToro have been saying they're working on this for years now. They were actually by a couple of people, um, and I'm trying to remember exactly how they answered it. I don't want you to quote me on it too much. Obviously, uh, there are some some things that I maybe can't tell you as well, but generally speaking, they're very much aware of the demand for it. I think some of the issue has been the complexity in terms of making it work, in terms of putting it into that tax wrapper. They do everything on a country by country basis. The UK is one of their biggest markets, so for the UK, the tax wrapper, the ISA, is much more likely to be developed for copy trading within an ISA more quickly than other countries that are less kind of prevalent on eToro. They are still looking at it. They are still working on it. Um, but I think in terms of time horizon, I wouldn't expect it within the next 12 months or so, at least. From that's the impression I got, at least. It would be lovely if they could. I don't know if some of it's surrounding regulations and complexities on that side of things, the way the money is stored and the way copy trading works and things, perhaps. Also, there would have to be limitations potentially on how those funds are invested. There are some products that you can't invest in through an ISA that people who are copy trading like myself do invest in. And so that means that maybe the copies would be out of synchronization. So yeah, I think it's quite a complex topic actually under the surface. So I'm not sure that I would hold out too much hope for it just yet. But hopefully they will at least add a kind of self-managed ISA a bit more quickly that maybe doesn't have copy trading, but is still, you can manage your ISA yourself on eToro, competing with some of the other products out there on the market. Yeah, I hope that answers your question. Aren't you afraid of potential conflicts, China, Taiwan, US, and others? Afraid is I was going to say afraid is possibly the wrong word, but I mean, it is ultimately scary even on like an individual level. If we have a massive conflict between superpowers, right? Yeah, I think that there is genuine potential for the China-Taiwan situation to erupt within the next 3 to 5 years. I don't think it's imminent, but I think from 2026 onwards, I would be more cautious if the kind of global geopolitical kind of situation is still in a similar state to what it is now. I think China ultimately knows that they, to some extent, need to allow time if they want to try and avoid a massive global conflict. They need to allow time for some of the big companies that are very much reliant on Taiwan to diversify their reliance, I guess, and for some of those companies to move some of their operations to the US or Europe or wherever, because that reduces the risk of China then getting into a major conflict directly with the US. So I think China's not dumb. I think they're aware of that, and they're probably biding their time somewhat, even though they are posturing a lot. But ultimately, they do still seem very 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 kind of motivated to have that kind of conflict play out at some point. Obviously, the ramifications. I mean, Bloomberg did a study on this about a year ago now, and I think that their study suggested something like a 40% impact on global markets if there was a war between Taiwan and China at that moment in time. So the impact on markets cannot be understated. It's probably the biggest risk, I think, in terms of like its impact, at least, that we're really facing at the moment. More so than interest rates and inflation and Russia, Ukraine. I think it's it's definitely one of the biggest risks out there. However, I think when you look at the reality of things, I think it's also very, very risky for them as well. China's not going to go bulldozing into this at the moment when they know that the US and Europe are so reliant on Taiwan. It would obviously lead to kind of escalation and those other nations getting involved. So I think that's the thing is it's a risk. We have to consider it. We're looking at ways that we can try and hedge some of those risks if it does occur, which is why I've mentioned before the importance of having semiconductor exposure that's not directly related to Taiwan. But even then, if a conflict erupts there, then it's obvious that South Korea, Japan, everyone else in that region, which is where most of the other semiconductors are, will also be impacted. So yeah, it's a major risk to be looking out for. It's not something that keeps me awake at night all the time. Scotch stocks. Do you play poker? I actually really like poker, but I don't really play it very often. No. One of my friends is very very good at it. He's I think he won the World Series of Poker a couple of years ago. His name is Andy Wilson. If you know him, if you follow poker at all. And yeah, there's a few other of my friends from my gaming days that play a lot of poker, which honestly is probably the reason I don't play it very much, because they're all extremely good and compete on a global stage. So I don't want to play against them. Yeah, and I'm not quite as mathematically kind of focused as them in terms of like calculating probabilities on the fly in my head so rapidly. But yeah, it's a fun game. I like it, but I play it very casually. Okay, um, I apologize. I apologize again for having the wrong for having the wrong view up for so long. Looking at my pretty face, me talking. Um, hopefully the presentation was still okay. I am going to have to re-record this for YouTube, and I'm going to have to not do it today because my voice is going already. So if you missed it, it's not going to be on YouTube for a couple of days, I don't think, because really I don't think I can upload this. It's it's just not to the standards that I hold myself to. So apologies again for that. If you have any further questions that you didn't have time to ask or that you didn't want to ask here, with a live audience judging you, feel free to ask it on the eToro news feeds or poke me on Twitter. My DMs are always open there. I don't always reply super quickly because there's a lot of spam, but I'm always open to talking to copiers and followers and people that are just interested in markets, to be honest. So yeah, that's all. Final word before I go. Obviously, my socials are listed here on this slide that I'm going to actually show you. So please make sure that you're following the real me. There are still scammers and impersonators of me out on the internet that will try and take your money and tell you that there's a super secret investment. That's not something that I ever do. eToro is the only place that I trade somewhat on behalf of other people. I'm not going to be doing that anywhere else, and I will never approach anyone for any sort of an investment like that. Please, please, please make sure that's the real me that you're speaking to if you're talking online with anyone pretending to be me. That's all. Thanks for copying, watching, following, listening. I will see you all in the next one, which hopefully will only be in a few weeks' time. So yeah, that's my goal. My goal is to try and get it out within the next 14 days or so. So hopefully you'll see a post on the news feed soon about that. I also have a post that I'm working on at the moment, going through a lot of the changes to the portfolio over the last quarter as well, because there was a lot of rebalancing and things. So I wanted to highlight that as well. So that will also be on the news feed soon. That's it. Thanks again, and I will see everyone next time.